introduce our guest, Javier. He's the, correct me if I'm wrong, Javier, but I believe that you are the director of um, government guaranteed lending at Locality Bank. And I believe he also spent years in lending with deep expertise in acquisition financing. So, Javier, thank you for being with us. It's actually great to finally meet you. And to set the stage for him, today's theme is government shutdown strategy and reminders of big acquisition basics. So, he'll cover everything about it. Feel free to let us know if you do have any question. So, yes, Javier, jump in and start the conversation.
Beautiful. Thank you, Andy. And it's a pleasure to meet you as well. Happy Monday, everybody. And hopefully everyone's recovered from their Thanksgiving week. I know I gained a couple pounds, so I'm looking forward to working those off, right? Hopefully not too much more in the next month. I'm going to go ahead and share the presentation that I gave last time. I'm going to not take as much time on the basics, and I really want to have a more prolonged conversation on the current events and updates. But by all means, if there's a topic on any slide or any question, this is an interactive conversation. Please take advantage. I tell everyone I'm a one-trick pony. I think it's a good trick, though. I think the government guaranteed lending is what I've been doing for over a decade now, and been running shops for most of that time. I think now we're about 320 million of lending that I've done directly through myself or my lending team. So with that, let me share my screen, and here we go. All righty. So everyone knows, I mean, if you're on this call, you know what an SBA loan, right? An SBA loan is a product that is semi-public, semi-private, right? Where banks provide the capital, but you get a government guaranteed from the government to protect the institutions, right? So it's not dollar for dollar. The guarantees range from 50% to as high as 90%, where the majority of SBA 7A loans carry a 75% guarantee. Okay. One of the many uses that, hands down, the best use of the program, and I don't say that because I'm biased, but in the banking world, you're never going to find a product that has these terms for acquisition of businesses, especially when they're not fully real estate, so collateralized. It's going to be very rare, especially at these dollar amounts. So at $5 million or less, this is it. This is the only way you're going to be able to buy businesses from banks with bank monies, right? And these are the general requirements, right? You can 10% equity injection. There's some give there. We'll talk about that later as well. The loan portion is capped at $5 million. We'll talk about some potential changes to that in the future, but keep that in mind when you're looking at businesses. That's your leverage capacity. My recommendation is you don't go for the full boat at day one, but this is also important to keep in mind because it's just $5 million of total aggregate exposure at one time, right? So you may want to be a serial acquirer, right? And this could be how much capacity you have in your gunpowder that you're going to have available to exercise that plan, right? So we're cash flow lenders, right? SBA lenders are going to be predominantly looking at ability to repay as the main driver of credit decisioning. Collateral is mitigated by the government guarantee, and then our 1A, 1B, 1A being cash and 1B being the character of the borrowers, right? It goes into not only creditworthiness but also experience in industries. We'll talk about that later. But here's an example of some EBITDA, earnings before interest, taxes, and depreciation is the main cash flow. We will consider some additional add backs, but here's another pro tip. If you're doing a lot of add backs, it's not a good way to start, right? So the way that banks look at it, if it's good enough for the IRS, it's going to be good enough for us from a debt service capacity perspective. Okay. Terms of the loan are predominantly 10-year, unless you blend it with real estate. And if real estate goes over 51% of the use of proceeds, it goes into this magic world, the 25-year term financing. We talked about this last time as well, but you can also, you don't have to buy a business in the real estate that they're in. You can buy the business and a separate real estate property and combine them together into the same use. More complicated. You have multiple parties you're dealing with, but it can be done in order to take advantage of that amazing term, right? 25-year term for goodwill is unbelievable. Fully amortized, and depending on the term where you're going to have a prepayment penalty or not, right? In SBA, the bank's going to make you want to have insurances for everything, so get ready for that. Um, these are the general main qualifiers. Predominantly, locality really takes it to where the SBA is okay with. There's no credit score minimum for the SBA, but industry wide, you're looking at 650 or higher. That debt service requirement of 115, that's the SBA minimum requirement. Most banks will want to probably say 1.2, 1.25 times. And just so everyone's educated, debt service coverage is calculated with you take a period, right? So let's say we're going to look at last year's tax return, so 2024 full year. You're going to look at the EBITDA for that entire period, and that's your numerator. Your denominator is the amount of debt service that business has over that period, right? So that would be the interest and the principal that is being paid over that same period. So if you divide that EBITDA on the top versus total debt payments, interest and principal, that number should equal 1.15 times. So in layman's terms, for every dollar of debt, you need to have at least $1.15 in EBITDA. And then the higher the ratio, the better. Okay. You're going to want to see, this is a conversation I have about the coin with two sides, right? Every business acquisition is a two-sided coin. The first side being the target that you're trying to acquire, and the other side is the acquirer, the person who's trying to buy the business. So those individuals, it could be one or multiple, and depending on what the ownership percentage of your transaction is going to be, anyone with 20% or greater ownership needs to have their tax returns, a resume, and a PFS at a minimum to be ready to go, right? Ideally, this is where you have an opportunity to drive the narrative. So, you can give me a very simple resume, or you can be giving me a narrative of your experience. And here's an amazing fact: bankers are lazy. So the easier you make it for them, the better the outcome, right? You can drive the narrative in the way that your personal experience or the business experience is presented to the decision makers at the institutions. Okay. The equity injection process, we talked about a minimum of 10%. There's only one caveat around that. That's if you get the seller to hold a seller note on full standby and subordinated to the SBA loan. That will allow you to reduce your minimum requirement to 50%, right? So now instead of bringing 10% to the table, you can get 90% from the bank, 5% from the seller, and 5% from you individually. Okay. Let's see. Partial. Okay, so I'm going to just educate you. If you want a seller, if you don't want to buy the whole business, let's say you want to buy 85% of it, and the seller wants to stay on, that's allowed. That's allowed. But what's I've never seen happen, and I just want to educate you on the ability that the seller will have to guarantee the loan as well. If it's over 20%, that would be a full guarantee. If it's under 20%, it would be a guarantee for 2 years. So they treat it almost like if it was a seller note, right? But I've never seen a seller willing to guarantee the debt on that side. But I wanted to educate you on the rules, right? And then this is one that's just effective this year as of June 1st. The 100% U.S. citizen or legal permanent resident owned requirement. So you cannot have any minority investors or partners who are not U.S. citizens or legal permanent residents, green card holders. So here's the fun part. You guys, I'm sure, have been paying attention. The government shutdown, the longest one in U.S. history, was just finished 2 weeks ago. Thank God, right? We should have been sooner, but man, imagine that during the holidays. That would have been really bad. Now, unfortunately, what that means for SBA lenders is the SBA is part of the government, and they're not processing these policies, right? So the bank is providing the monies. We're doing all the underwriting. We can do closing, but we just can't fund. We can't close the loan until we get the authorization, which is the policy number from the government. And while the government shut down, I don't care who you are, Bank of America or Locality or everyone in between, right? You're not going to be able to get an SBA loan done until you have that authorization number if the government is shut down. All right, but you're like, Javier, that was taken care of. We just, right, Andy? It was just, we had a continuous CR, continuous resolution passed not just 2 weeks ago. We're funded. The devil's in the details, right? That CR is only good through January 30th. So there is, right now, currently, there is good bipartisan conversation about getting a more permanent funding plan passed that will solve this problem. But all they did was kick the can down the road. So this may not be impactful for everyone on this call, but if there is an opportunity that is pressing, you have a 60-day window, guys, right? So I don't want the government to shut down again. But if I were a betting man, I would bet that the longest government shutdown is not going to be preceded by smooth, very quick budget proposal passing, right? So I would say, this could be a good conversation starter, or if you're having someone who is, on the fence, if you want to shut down get something going, it affects everybody. So if anyone who's trying to sell their business and they want to have the availability of SBA to support it, they're going to need to get it done sooner than later if they have a hard deadline. This time of year, there's also the benefit of being the end of the year where you're able to start closing out your books, right? So another thing is we can look at businesses that have projected year ends, and then we can guide you on if those projected year ends have debt service capacity. And there's always a tax mitigation or tax evasion conversation, right? So businesses love to mitigate how much taxes they pay, but that impacts debt service capacity and ultimately the ability to repay. So we talked about the legal permanent resident and ownership citizen requirement. There is a consideration. This is super, super secret right now, but there is a consideration of doing a 1 to 3% allocation allotment to help some businesses that have very small minority interests that are foreign to still be SBA eligible. And then the only other things that I want to talk about a little bit more macroeconomic in general, the interest rates, I think we're going to have a cut. I think we're in our poly markets at 90%. The Wall Street Journal is projecting a cut. Let's see if Jerome Powell is going to help us out. But the impact here, guys, is deals that you looked at 6 months ago were under different interest rate environments. So the deal terms could change in your favor, right? That would be in a declining interest rate environment. It would be in your favor, and an inclining, that means the deal terms are getting worse as far as how much the loan payment's going to be and how those debt service coverage ratios are impacted. So if you had a deal that was close, as these rates go down, those deals will get easier to be done, right? And then economically speaking, as a banker, this year is turning out to be, I think the word of the year is going to be uncertainty. Still very mixed picture on the economic outlook for the rest of this year and then early next year. You have what's called the K economy. A lot of the high end consumer, the top 5% are doing the bulk of the spending and doing a lot of it still, and everyone else is not. So consumer sentiment's down, but you still have the biggest Black Friday spend so far from a retail numbers perspective being reported for this past Friday, while we're having the lowest consumer sentiment figures that we've seen in a long time. So the only other thing I would like to mention, and you're all aware, big industry trends in SBA. Manufacturing is the big topic right now with administration. So very favorable terms and structures that are being looked at for manufacturing. If the loan's under $950,000, the fee is waived. That's a new thing that was just released. The SBA guarantee fee, which is basically the policy fee that's paid for the historical losses and the probability of default of the program is what that covers. So yeah, I'd like to open the floor for questions. What do you say, Andy? I mean, that was the extent of my presentation. Here's a little bit of my anecdotes. Here's my employer and a little bit of our background. And I can share this slide with anyone on the call if they like. But in the meantime, love to open the floor to any questions with the few minutes we still have.
Well, thank you for that, Javier. You can share the presentation to me, and I'll be more than happy to share it with our accelerators, including your contact details. Um, well, one question that I received recently from one of our AEs is that what if they buy a license, trade businesses without holding a license? Like, what are the actions that they need to do? Though we have suggestions, what are your insights about it?
All right, so direct industry experience and the licensing requirements. So it seems that every trainer profession that is licensed has a very different process, right? So the answer, if anyone was with me on the last call, they would remember that the answer to every question that a banker should tell you, and if they don't tell you this answer, they're lying. It depends. Okay, it depends on the industry that you're trying to get into, right? So the licensing requirements. Um, this is where or we talked earlier about. This is where you control the narrative, right? So how do you present the best narrative for your condition? You need to know the licensing requirements better than the bank does. So you educate the bank on, okay, for plumbers, you need to be X amount of experience. You need to pass this test. You need to do this. Okay, these are the barriers to entry, right? What is your solution to you? I'm going to hire a license holder and I'm going to have him, be with me. Okay. Is it on staff? Do you have someone already identified? Do you have a list of people you've already interviewed? Did you do market research to see what an annual salary of that licensed professional would be? Something that's built into your projections, right? So then the answers could be, this business already has an employee who will be staying on that I will have a multi-year agreement with that will be holding the license. If said person gets run over by a bus, I will be able to find in a marketplace a replacement in this price range. And that would be like my continuation plan. And then my long-term plan could be, if it is, for you yourself to be licensed. And these are the steps that you're taking or would be taking in order to fulfill that long term, right? So that answer in that various forms would be very different, right? If you're talking about a biopharma company, direct experience probably is going to be a lot more important than, let's say, plumbing company, right? Which is direct experience is very important too, but we're not talking about the same level of licensing or oversight or third party control perspective. Does that make sense, Andy?
It
Hey,
does.
Javier.
Yep.
Oh,
Go
sorry,
ahead,
Andy. I
Karen.
didn't I didn't mean to cut you out. I just had a follow on. I am curious, like, as far as just what you're seeing and what you're underwriting to. Same scenario. Let's just assume it's an electrical, right, trades business. The seller staying on as the RME. Is that generally acceptable for the first 12 months? I'm kind of hearing that
Yeah.
most lenders require a more substantial plan outside of that.
Well, it would be the combination of everything I just said plus the intermediary piece, right? So if there's a transition period that you're going to have to, because the loan, we're giving you a 10-year loan. And if you're only licensed for, you have an agreement in place, you can have it in perpetuity, you can have other things, right? But at the end of the day, we want to see what your plan is. So if you
Yeah.
communicate that, at the end of the day, that's the most important part. Now, whether it's believable or not, right? What do we see? There's if it's always in my mind to go the market. What is the current cost of finding someone to replace that individual? Because that's the easiest way to just monetize that cost. And as long as there's enough free cash flow, then you can mitigate that, right? You can overpay for a license.
Sure.
Worst
Okay.
case, you'll overpay, right? But
Yeah, exactly.
that's not what you want to hear as a banker. What you want to hear is that's your worst case backup plan. My other plan is ideally you're gonna get it, right? Or if
Yeah.
not, you're gonna have someone that's locked up with a long-term, employment contract or employee stock ownership program, or there's a lot of ways for you to
Yeah.
align the interest with the mitigating the risk.
Yeah. Perfect.
I love these questions. Anything else? Any curveballs?
All right, Javier. If I didn't wait long enough to give someone else an opportunity, I'm looking at a business right now. That it is an electrical services and lighting company. Um, they have an extreme customer concentration. I'm just curious, like if you can provide some guidance. So, I mean, their customer concentration is 90% over the last 3 years on average. Their single large customer happens to be one of the larger property management companies. And so like the customer itself is extremely resilient. And I'd say the revenue can be argued is fairly resilient. Like, are those scenarios, like, again, with the right narrative and plan, like, is that something that can be like underwritten and approved in your experience?
So is the concentration risk always is an issue, but this is a little bit of it's concentration risk because it's one buyer but several properties, right? So it's
Yeah.
just like you're going through there. Is there a long-term agreement in place, right? Where is that month to month? Is it yearly? Is there a
Yeah. I
contractual?
mean, they do have like an MSA, like I think it's an annual or it might be multi-year. And then, right, individual projects are still bid on an individual basis.
So they're not obligated to use your target. They're just
Correct.
using them because they end up being the one that they want to use.
Yeah, like it's a preferred vendor, which is
Mhm.
finite, right? The number of those. In this case, it's really like 3 to 5. Um, but yeah, there's no
Are they going to
guaranteed
hold paper?
work.
Or is the seller going to hold paper?
Um, that's up in the air. My preference would be yes, like a fairly substantial seller note, like let's call it 20% of the purchase price. But then I run
But
into
yeah, I was going to agree with your strategy because, well, frankly, the negative. Here's a great thing about your position, guys. Anything that's bad about the business is where if it's in your advantage. If there's these like a concentration risk, most banks are going to be hesitant with that, right? So because here's the biggest risk in a business acquisition is, can the new business owner maintain what's happened before, right? That's what banks want to see. We're
Mhm.
not looking for you to blow it out, right? Now, in this particular case, how can you demonstrate to me, Kyle, as a banker, that that relationship is in good hands with you? I don't know what that's the current owner, the seller has been doing, right?
Yeah.
Uh, and there's no guarantees, right? That's a risk that you have, but use that to your advantage, right? So I would hammer
Yeah.
down and say, at 20%, I would even go higher, and
Hmm.
I would probably split up the seller notes into a couple functions where you could an SBA loan. Here's a temporal exercise. Maybe you do a piece of the SBA loan now with two seller notes, one on a 2-year standby, and then the other one on full standby, or however else you wanted to structure it.
Yeah.
That 2-year standby, SBA, after 2 years of seasoning, seller notes are eligible for refinance.
Yeah.
So at that level, that's you've downsided. You then have made this deal bankable, right? You keep the seller on the hook for 2 years, and you bluff them to see if there's another bank. If you're competing against other levered buyers, they're
Hmm.
all going to run into the same problem. Every one
Yeah.
of them.
Cool. I appreciate the guidance.
Cool beans. Speak now or forever hold your peace. Okay. How you got another one for me, or are we good?
We could keep going all day. I am going to reach out to you. I'm waiting on a couple things for this specific deal, so you'll be getting an email from me probably within the next few days.
Looking forward to it. Well,
Yeah, man.
my contact information includes my cell phone number for everyone here on the call. I think I said this on the last time as well. This is you're getting married. You're not dating, right? So right now you have to really take your time. You don't, it takes several months, if not years, to find the right exact target company. But being prepared, taking these steps, so when that opportunity is present, you have the knowledge and the ability to execute. So happy Monday, guys. Looking forward to it. Andy, any closing words?
On behalf of Acquire and all the accelerators on this call, we would like to thank you for your time and for sharing, right? The topic and your insights and answering some of the questions as well. And it's our first time meeting one another, hopefully not the last. And for the group, if you have any questions, feel free to reach out to Javier. Um, to get his information, I included his details on our trusted partners list. Let me know if you don't have that link for our trusted partners. I'll definitely send his contact information. So thanks again, everyone. We'll give you back your time and happy Monday.
Happy Monday, guys. Take care. Bye bye.